And good afternoon. This is Jeffrey Tesch, CEO of RCN Capital. Thank you so much for joining our webinar today. A big thank you to Robert and Suzanne from REI Inc. Their magazine has graciously put this webinar together and really provided great content as well as a great panel for us to get started with today. Today we're going to start with a bit of the state of the market, where we've come from, and then from there, we're going to get right into the panel and really dive in to some of the questions that we've all been experiencing as lenders, service providers, and most importantly, investors in the real estate space today. So let's get started. So the single family rental market by the numbers, it really is tremendous. If you look at that first box on the left-hand side of your screen, 53% of all rental properties in the United States are single family or 2 to 4 family unit rentals. What does that mean? That means as individual investors around the country, folks have been aggregating these individual homes for long-term rental portfolios. And as you can see by that number, it is absolutely exploding across the United States. Middle box, if you take a look at all of the numbers included in rental housing, 23 million rental properties today are single family or 2 to 4 family unit residences, which comprises 35% of all the available rental units across the United States. So what you want to think about there is all of the multifamily housing that is built across the United States. Once you aggregate in all the single family and 1 to 4s, well over a third of all the folks renting properties today are renting them outside of traditional apartment building units. Really amazing. So, who is investing in the single family rental space today? And this chart really tells the story. If you look all the way on your left segment, so what this would be is the number of units that are comprised in any individual's portfolio. And we start with a segment of 1. Oftentimes we call this the accidental investor. They have a home, maybe they moved, they kept it for rental property, maybe a family member passed on, they chose to keep it and not sell it and rent it out, or they're just starting to look to some sort of long-term portfolio through rental real estate. And that number is truly staggering. Over 8 million single-family properties across the United States, comprising over 50% market share of the single-family rental investment community. Truly tremendous. And as you work your way down, 2 to 5, 6 to 10, 11 to 25, you can see how the investor pool gets smaller and smaller. And by the time you get to the bottom, you're looking at much more sophisticated investors, oftentimes comprised through real estate investment trusts. But really what I want you to take away from this chart is really the breadth and the exposure that investors have today to the single family home investment marketplace across the United States. Really tremendous. Moving on to quarterly investor sales. So what's interesting here is over the past 10 quarters, investor home buying growth outperformed total home sales. While total home sales declined by 2.6% over the year in the second quarter of 2019, investor home buying grew by 5.4%. Very, very interesting. So, despite a prolonged period of declining home inventory, rising prices, investment sales continue to see fairly stable growth looking all the way back to 2014. Now, albeit not as high as the few years immediately following the recession when home prices bottomed out. But what's really interesting about this chart is, does it give us a look into where we're going? And it's certainly going to be one of the topics that we're going to discuss today. But there's no denying the fact that investors have been on a tear for a very long time. And now if you look at the investment share of sales, as non-investment home sales slowed, the investment share of total sales rose all the way from 7.1% in the second quarter of 2018 to 7.7% in the second quarter of 19. Currently, the second quarter of this year has seen the highest second quarter investment since 2013, meaning 2019. When I say this year, this would be year ending 2019. And it really is quite interesting. But once again, it tells the story of what's been happening across the United States, which is the single family home continuing to be the investment of choice. So let's start to think about where we are today, the new reality. So inventory was at historic lows. Demand was at historic highs just a few short weeks ago. Oftentimes, investors were bidding against one another to acquire those assets for their portfolio. And why not? Mortgage rates were heading lower over and over again. On the bridge side of things, margins became more and more compressed, which made the long-term aggregation of single-family homes even more attractive. That's where we were. Where we are today, a liquidity crunch caused by capital and financial market instability, which we're going to get into today, and how this has affected investors' ability to be able to obtain new debt, both short-term and long-term. And just as importantly, federally implemented moratorium on foreclosures and evictions, and how that's affecting our investor community today, and how we're going to handle that over the short term and the long term. We've got a lot to discuss today. How can we as investors navigate through these new challenges? Well, it's going to be through discussion. It's going to be through a sharing of best practices. And we're going to do this today and every Monday for the next 8 weeks, thanks to REI Inc. Really looking forward to kicking off today's panel. So we've got an outstanding panel today from all aspects of the real estate investing community. We're going to start with Randall Henderson, Vice President, Property Management Inc. from Salt Lake, Utah. Randall, please jump in. Give us a little bit about yourself and your company, please.
Hey, Jeff, and thanks for having me on today. I'm excited to be here and provide a little bit of perspective on the property management and landlording side of things. Looking at that second slide that you showed, about 80% of the single family investments in this country are less than 5 or less. And of those, around 35% are professionally managed. And that's where PMI has taken a portion of that market share. So we manage around 60,000 properties across the country. We're in 43 states. We're a franchisor. So we have franchisees on the ground in many locations. And I'm excited to bring a little bit of perspective on the most recent data that's coming out for April as far as rent collection, and also to talk about the implication of some of these changes and laws. And as you mentioned, the big huge one, which is the foreclosure and eviction moratorium, and looking at it from how we're adjusting as property managers and how we're helping our investors to still benefit and gain through this challenge. So thanks for having me.
My pleasure, Randall. Next up, Jonathan Hornik from Private Lender Law who's an expert in all things real estate with a special expertise at providing counsel to real estate investment companies across the nation. He's also a dear friend. John.
Thank you, Jeff. Good afternoon, everyone. I hope everyone's faring well, given the current circumstances. So what we've done at our private lender law, we're a law firm, is we've taken a look at all the changes in the laws around the country, which have happened quickly, as many of you know. We're operating currently on two levels. First, there's the federal level, where change in laws and new lending opportunities for businesses, both real estate and non-real estate, are being made available both on a small business perspective and on a larger tax credit perspective through the CARES Act are being done. And secondly, each governor is issuing executive orders, and some states are taking statutory action to limit the amount of rents that have to be paid during this time, as well as limiting foreclosure and eviction proceedings. So it's been challenging to keep up the speed because it's almost changing daily. So where we're spending our time right now is advising our clients on what they can and should be proceeding with operating in this quote unquote emergency period while the country's in shutdown. And then we're starting to look past where we go after that period ends. It is a time of uncertainty. And we begin every call with our clients telling them this is a fluid situation. So something that we say is true one day could be changed the next day just by operational law or by a clarification of a rule. So we're on top of it. We're working through this emergency period, and we're hopeful that it ends sooner rather than later, so we could get back to doing business as usual.
Appreciate that, John. Next up, we have David Howard, Executive Director, National Rental Home Council. David is out of Washington, D.C. Welcome aboard, David.
Jeffrey, thanks so much. And thanks for including me on the call this afternoon. I really appreciate being given this opportunity to participate. And thought the overview and the presentation you gave a few minutes ago was fantastic. So thanks for doing that. Special thanks also to my friends at REI Inc. for the invitation to participate here as well. Just quickly, in terms of who I am, I'm the Executive Director of the National Rental Home Council. We're the trade association representing the single-family rental home industry based here in Washington, D.C. We spend the majority of our time, certainly have been spending the majority of our time of late, working on many of those issues that Jonathan just talked about, particularly stimulus issues coming out of DC that impact both our landlords, our owners, and also residents. We're spending a lot of time this week and next working with legislators, policymakers, staffers, et cetera, on issues of rental assistance. There was a lot, as I'm sure everybody on this call knows, that came out of the previous rounds of stimulus that in one way or another were probably good for the renting public. But the one thing specifically that was not included in any of the stimulus provisions that have come out so far was anything particular to rental assistance, other than assistance provided for low-income and homeless populations. And so, again, we are working here in D.C. Very diligently to see about having provisions for rental assistance added to future rounds of stimulus being provided by the federal government. So I'll end it there, kick it back to you, Jeffrey, but looking forward to talking a little bit further about what we're doing here in DC.
Thanks so much, David. And finally, we have Danny Linenger, National Sales Manager, Home Depot Pro Renovation Services. Danny, really looking forward to hearing your take as you are an essential business. Looking forward to everything that you've got today.
Thank you, Jeff. As you mentioned, my name is Danny Linenger. I work for the renovation services team within Home Depot. Our group has been supporting the real estate industry since really the foreclosure crisis happened back in '08. So we are kind of going to give a view from the contractor standpoint and what we're hearing from our network. And then I also just would love to give just a a general update on what's happening through the Home Depot stores. As you know, we're constantly fielding government requests and following all the rules at the local level. But super excited to be part of this call today, and I appreciate the time.
Absolutely. Thanks so much, Danny. And finally, once again, my name is Jeffrey Tesch. I'm CEO of RCN Capital. We are based out of Connecticut, and we are a nationwide platform. You want to look at us as a family office that provides monies nationwide to investors, not only aggregating short-term fix and holds, but short-term fix and flips as well. 30-year products right down to short-term needs on a bridge capacity. Been in business since 2010, a little over 100 employees here just outside of New York City in Connecticut. So really, once again, a pleasure. Thanks again to REI Inc. for setting this up. So let's get right into it today. David, I would love to hear from you first off on how you're seeing the policy coming out that's going to affect the investors, not only from a forbearance standpoint, but any sort of assistance that you're lobbying for from a federal level. Please provide us what you're seeing from National Rental Home Council.
So obviously, Jeffrey, this storm hit very, very quickly. I think early on in the process, the expectation was there would be a lot of difficulty and hardship at lower income levels. So again, low income populations, homeless populations, vulnerable populations, seniors, some disabled. What quickly became evident was not only were those demographics experiencing hardship, but so were working families, middle income families, middle class families across the country. And for our members tend to be mid-sized to larger owners and operators of single family rental homes. So companies like Invitation Homes, Tricon American Homes, American Homes for Rent, Progress Residential, et cetera. For those companies, there was concern almost immediately. And that concern was, again, these working families, middle income earners were bearing the brunt of emerging job losses, work furloughs, other work stoppages. This was impacting their ability to pay rent. And this message really wasn't making its way to policymakers and legislators here in DC. Again, the focus primarily was on lower income and homeless populations, and again, other populations that needed to be serviced first and foremost. We totally support that. Take care of the vulnerable populations, whether it's through direct payments, whether it's through beefed up on insurance, unemployment insurance, other forms of direct stimulus that were coming out of DC in the most recent round of stimulus to the CARES Act. That was all very, very appropriate. But again, the real issue I think now affecting the economy is you have this huge piece of middle income, again, middle class working families who are also bearing the brunt of this hardship that is working its way across the country. And the issue is not a lot of these families, not a lot of these renters have much in savings. And so you might be able to get through April. Our problem and what we're really focused on is what happens in May, what happens in June. And if this thing extends further beyond that, there's going to be some real trouble. The assumption, and I'm sure everybody on the phone knows this, the assumption that was making its way through the media and to some extent was coming out of Capitol Hill here in DC, at least early on, was landlords could somehow bear the brunt of any prolonged rent, a break in the rent cycle. And that's really not the case. For anybody on the call today, anybody who makes loans in this space, owners and operators, landlords work on the thinnest of margins. You're still responsible for paying your taxes. You're still responsible for paying for the upkeep and the maintenance on your homes. You're also still responsible for servicing the debt on those homes. And so if there's any protracted, prolonged break in the rent cycle, things are going to start to break down very, very quickly. And so that was our message early on. talking to legislators, talking to staff members, talking to members of the administration about the fact that this was a big problem and likely to only get bigger. And, again, I've got to say, people here in D.C., elected officials, policymakers, I think are doing a really good job. They're working hard. They're trying to figure out the lay of the land. I mean, keep in mind, Congress and the Senate aren't even here in D.C. They're not due to come back until later in the month. My guess is because of all the travel restrictions, that probably won't happen. And so the way of doing business here in D.C. has changed in a very fundamental way. No longer can you pick up the phone, send an email, and show up next week at somebody's office to talk about what it is you want to accomplish. You now have to set up phone calls. You've got to work your way through staffers. I mean, you all know this. It's early mornings. It's late nights. And again, I think everybody is trying to do their best with what they have available, given the current situation. And so the dynamic here in DC in terms of shaping policy and advocating for policy is very different than it was a couple of months ago. And so first and foremost, what we wanted to do was make sure this issue was recognized among policymakers and folks who could make a difference. And I think we're there. I think people now sort of understand, look, this isn't just a problem that's going to hit low-income populations. This is something that's going to work its way across income levels throughout the economy, and it's something that's got to be addressed. I think we're there. We're starting to see and hear from legislators in their public comments about the need to address rental assistance. And we have a proposal that we have put together that we think makes sense, that we are putting in front of legislators in terms of how this issue can be addressed, how this program could work. And we're also working with legislators to let them know, hey, here's a proposal, here's a plan that we think will address the problem. But if it needs to be tweaked, if it needs to be reshaped, talk to us. We're willing to work with you. We're willing to bring companies onto the phone to talk to you about what they're seeing, what they're hearing from residents, what they think is the best way to proceed. So again, we've got a proposal. It's out in front of lawmakers. We're talking to them on a daily basis about things that we would like to see, about things that I think would be good for the economy, and frankly, could be things that help to resolve a lot of big issues that are bubbling up across the economy. Again, the fact that people can't pay their rent, the fact that landlords are not in a position to backstop a lot of these problems. These are big issues. They're serious issues, and they're issues that need to be addressed relatively soon, again, or they're going to be big problems. A lot of companies are telling me, hey, this has a feel that it could be 2008, 2009, 2010 all over again. We don't want that. We need to do something about it. So that's where we're spending the bulk of our time. I'll kind of end there, Jeffrey, and turn it back to you. Go ahead.
Yeah, appreciate that, David. That's really great insight, and thank you for the work that you're doing at the National Rental Home Council. And I don't know if you have the ability to, but I'm quite sure that our audience today would love a little deeper dive on what some of the proposals are that you're hoping that Congress may enact, whether it be forbearance, direct rental assistance to landlords. What direction are you taking, David?
So the simplest approach, and look, when you're dealing with legislators and policymakers in D.C., the simplest approach is always the best, right? And so what we're saying is what is likely to make the most difference in the shortest amount of time is some kind of program of direct payment to renters or landlords for the purpose of paying rent. I mentioned there were some provisions that came out of the CARES Act that I actually think are going to be good for the economy. Direct payment to households, I think, is very good. Beefed up unemployment insurance, I think, is very good. Some of the other provisions that came out of the CARES Act are also very good because they're going to support consumers, they're going to support families. But the reality is, and I think we all know this, if you get a direct check from the government for $1,200 or $2,400 or whatever it is, because you've lost your job or whatever the situation might be, you're most likely not going to use that money for rent. You're going to use it to buy food. You're going to make your car payment. You're going to pay your phone bill. You're going to do a lot of other things with it before you pay rent. I think that's human nature. I would likely do the same thing. And so what we're saying to the government is, hey, here's the problem. And it really can't be resolved by just sending out checks. You need to earmark money to consumers so that they can pay their rent. And oh, by the way, we're also saying that's the case for mortgages. People need money to make their housing payments, whether it's rent or whether it's mortgage. And we think the best way to accommodate that is to make those payments direct to landlords so that landlords then have the money, they can credit their tenants, their residents for that month's rent, and they can move on. I will say a lot of owner operators who comprise our membership are doing a lot of the right things. I mean, these are companies who in a very short amount of time have come out, have embraced the challenges, are trying to find solutions. They're working with tenants, they're working with residents, whether it's flexible payment plans. I've heard of companies allowing residents to dip into security deposits. So there's a lot going on that landlords are doing to work with tenants to keep them in their homes. Obviously, we've talked about some of the eviction issues and the moratoriums. That's making things a little more challenging. But look, I can tell you, none of the big companies in the industry are evicting anybody right now. First of all, you couldn't even if you, for some reason, tried, because the courts are shut down, the sheriff offices are not serving evictions, so it's very, very difficult, even if you tried to evict somebody. But none of the big owners are evicting anybody now anyway. So a lot of the companies are doing the right things. The problem is you've got a relatively large tenant base who, again, has lost their job, or God forbid, they've become sick because of COVID-19. And so what we're saying in this situation is the best way to keep people in their homes is to make payments directly to the residents and earmark somehow, whether it's through vouchers or, again, whether it's a direct payment, earmark that money for rent or just send it directly to the landlord. And we've got a 9-point program to show how that can be done. Another option, and I'll wrap it up here quickly, another option is to work with the states. So to funnel money in the form of community development block grants, which the government has used before to provide housing assistance, or whether it's some other means, distribute the funds to the states and let them work through an infrastructure that largely already exists, whether it's through housing authorities or what have you, to distribute money for the purpose of paying rent. Again, it's got to be targeted and it's got to be specific to allowing tenants to cover their rent for that month. So I'll cut it off.
I appreciate that, David. Yeah, no, that's really great insight as to what is happening in Washington, and you know that's a great segue over to Attorney Hornik, who I'm gonna phrase this question in sort of a two-part question, John. One is, I would like for you to sort of brief us as to the reality of today, right? David's got a lot of policies and different ideas on how we can get assistance, but I would like you to, number one, tell us where we stand today as a lender, as an investor, as someone who owns rental property. Where do we stand today? And then number two, maybe a little bit of opining on where you think we're going in the not too distant future when it comes to a state-by-state regulatory sort of assistance / forbearance / different ways that states are willing to help out the investment community.
All right, Jeff, thank you for the question. And David, thank you for your comments earlier. So to speak about where we are today, we are, I would say, in the emergency period, and we have very little help right now coming from the federal government. There has been the CARES Act that's been passed, and what always seems to be the problem is Congress acts and the lag time between the actual effect where money transfers both to consumers and to small businesses and large businesses. As you know, the applications open for the PPP assistance on Friday, and there seems to be an abundance of confusion about transferring that, which would go to a lot of landlords out there who have less than 500 employees who need the money in order to keep employees on from going on to the unemployment. So to answer your question directly, Jeff, the real laws that are taking effect right now are all the state laws passed mostly by executive order from the governors in the various states. So what we've been doing is digging down deep and looking from state to see which executive orders impact a tenant, a resident, pursuant to a lease, and the right to evict that tenant and to file, and for a lender to file foreclosures and when they're applicable. So it is a state by state analysis, sometimes a word by word analysis, depending on the language that was put out by the governor of the various states. So we've created, we've done a bunch of research for clients. We're providing the memo to them on how to act in each state. A lot of our clients are private lenders, and they want to know, are they allowed to foreclose on their tenants, not on their tenants, on their borrowers, if the borrowers are on unoccupied property, which is not the subject of this discussion. And the answer is, in most cases, the forbearance and foreclosure restrictions aren't applicable to them. But you then have to overlay on top of that the reality of realizing on your collateral in this circumstance, because remember, most states, 90+% of the country, are on some kind of lockdown or stay-at-home order, which means courts are closed. So the ability to file any kind of action in any state or federal court, for that matter, is very much at a standstill. So the reality of the situation is we're all waiting right now for this emergency to lift. Nothing can happen until these restrictions are lifted and this health crisis is over. We can't meaningfully deal with the economic crisis that's been created until the health crisis ends and we could start going back to work and looking at the damage. David mentioned getting help to the landlords. I spoke to a very large landlord in New York City last night, one of the largest. And what he mentioned to me was his very deep concern of retail returning to New York City. And, they have a lot of properties on Fifth Avenue. And I said, well, what are you going to do? And he said, what can we do? All the tenants are going to say they can't pay rent, and there's going to be no recourse against them other than holding them for breach of contract under the lease or cutting a new deal. They're not anticipating any federal aid for it. So, David, as you go to Congress and you speak to them, because most of the landlords in this case are considered commercial landlords, I think one of your challenges are going to be to parse the difference between those in the residential rental business and those in the commercial rental business. Because I think you'll get put, because if you open up that can of worms, there's a lot more aid than what's been delegated through the CARES Act necessary to help the commercial real estate space. Now, as far as where we're going, eventually this health crisis will be over. The emergency orders of the governors will be lifted and the courts will open up again, which will allow for the natural reconciliation of disagreements between landlords and tenants and lenders and borrowers. Whether there is funding that is going to be coming in to pay off, so the government picks up the bill for tenants or for borrowers to pay lenders and landlords, is going to be up to the Congress. So far, the only action that's been taken are deferral mechanisms, nothing about waiver. And, if the government starts considering waiving amounts due in our commercial democracy, we're going to have a situation where they have to waive it all the way up the line to Wall Street, who's providing most of the funding into these circumstances. Because you can't, if you waive a tenant's obligation to pay a landlord, the landlord still has to pay the lender the interest and the principal on its loan. So you'd have to go forth and waive that. And then that lender would have to waive the money he's taken off his credit lines or that he's gotten through his securitizations. So as for the golfers out there, unless you're going to call a complete mulligan during this economic health crisis, you have to be really careful where the government has to be really careful where it weighs in for complete waiver versus deferring until we get back on our feet.
Well, I appreciate that, John. And that really is a great point, which is if you start to discuss the end tenant not having to pay, then the landlord not having to pay, and the landlord not having to pay the lender, and then the lender who's got their debt securitized out into the bond market, and then the bond market sold those bonds to a teacher's pension, where does it end? And I think that is a great question and something that all of us need to think about. Where does it end? And certainly something to pass along to our elected officials. So we've gotten the federal look, we've gotten the state look, a little bit of opining on where we think we're going. Randall, would love to get a view now of how the investors are handling things today. You had mentioned in your opening that you have a little bit of data on how things are looking. Would love to hear real-time data as to what the investors are experiencing right now. Please go ahead, Randall.
Thank you, Jeffrey, and thanks, Jonathan and David, for your comments. I echo them fully. We're in a fluid situation, and we're trying to put into place policy that can help protect the asset, because ultimately a property manager has a fiduciary responsibility to that owner. But at the same time, we have to be open to working with the tenants directly, and it seems like each day more and more data comes out about what we can and can't do and how we can help. But the data that you're referring to, so typically by the 6th day of the month, so this is as of this morning, across our 60,000 doors, we're at usually about 95% collected in rent by today. Now, for April 6th, this morning, we're at 80%, and we expect that maybe to go up another 5 to 10%. So we had projected, and we think that based on our tenant makeup, we'll be at about 85 to 90% collection by the end of April. Now, as David mentioned, we are certainly projecting, and we feel very sure that for May it's going to be much worse. So we're thinking maybe around 70% collection for May, and then June remains to be seen. So I love hearing that David is working with Congress and thinking about the implications to both the landlord and the tenant, because we're here in between as property managers thinking, how can we have these proactive conversations? So we did advise our franchisees to reach out directly to their tenants and have that conversation 10 days ago of where do you think you're going to be on rent for April? What is it going to look like, and how can we work together? The CARES Act has already, impacted federally backed mortgages on both, as far as late fees as well as the eviction moratorium. But that only comprises maybe between 40 to 50% of a portfolio that a landlord will manage as far as being federally backed or not. And so our advice and what we've been doing as policy is just simply saying what David said, is that, look, we're not going to evict people in this current environment for a period of time. How long is that time? We're not sure yet. But as Jonathan mentioned as well, each governor has issued an executive order, and we've been tracking those state by state as well to understand. In fact, on Friday of last week, the governor of Utah, the state that I live in, issued an order basically saying that no one is going to pay rent until May 15th who's been impacted by coronavirus. And what does that impact mean? And how do we measure that? Well, that's up to us to determine the details, in the same way that the Congress will pass these federal laws, and then how they play out and how they're interpreted and how they're applied is oftentimes up to us to work through and understand and try to be in front of. So first and foremost, our policy adjustments have been around the safety and security of our tenants and owners, and letting them know that we're still here, we're still going to be driving and taking care of their asset. But at the same time, letting tenants know, hey, we're not going to be doing we're not going to be doing any maintenance other than emergency maintenance at this time, or outdoor maintenance. We're going to be moving entirely to a self-showing platform, to where vacant units are not going to have an agent or someone else there showing the unit. And so those type of adjustments are first, And now we're looking at how do we address the shortfalls that we're seeing for April and May. So we're not sure what that's going to mean. I'm again excited to hear what Dave is working on. We know it's a fluid situation. We are making changes to try to get some of the security deposit back into the hands of tenants, and there's programs that are designed to do that. Companies and third parties that you can partner with, where it creates a monthly payment for the security deposit. So hopefully you can return some of that into the tenant's hands to help. But most important for us is to communicate with our tenants. Make sure that they are not, ostrich with the head in the sand as far as their rent not being able to make it. So that puts us in a situation where we are having a lot of conversations about payment plans, and here's the first option, here's the second option, here's the third option. Our portfolio is made up of both residential and commercial, and so I echo Jonathan's concerns as well on the commercial side. What relief will we see there? Because it is certainly going to be a trickle-down effect. But that's kind of the take of where we're at and what we're projecting. But certainly that May and June will be worse than April.
Really great stuff, Randall. So with your direct partners across the country, is there any best practices that you could share with our attendees on the call today, especially from a rent perspective? You had mentioned making sure that everyone reached out prior to April 1st, but are there any other best practices that you could share with us that may help the investors on the call today?
Sure. I would say one thing is just be sensitive first and foremost. Obviously, they understand that you have a liability to your mortgage as an investor as well. So you want to approach the conversation sensitively, proactively reach out to them. Consider certain things like, for example, we're implementing a grace period for the month of April. We're extending that ability to pay past what would normally be on the 5th out to the 15th. We're communicating that we're shutting off late fees. We're also trying to help them plug into the resources that are available to them in the local area. So, hey, how can we help you work with these groups that are providing rent relief, and how do we get you the information that you need? The challenge that a property manager faces is that they have to balance what they're doing with the tenant with the desires and concerns of the owner. And so, as far as actual collection of rent, consider having a rent deferment program that is set, where you're saying, hey, I understand that you're not going to be able to make rent today, but let's put a plan in place, and you run with that until otherwise impacted by other groups and legislation. So, those are kind of some of the things that we're thinking about and working on. We also, and this is maybe more applicable to larger groups, but we've put into place a GoFundMe for tenants that are struggling, and owners are contributing to pay for a percentage, or we've got it set up to be up to 25% of rent for a single tenant. And it's been incredible to see some of the generous stories that have come out of our portfolio of owners who maybe are holding in cash and are willing to offer forbearance on their own. So it's just a lot of communication both ways, both with the owners and with the tenants. But I hope that helps a little bit.
No, absolutely. And, I think the overarching theme from you is empathy, really having the individual, either property manager on the ground or a larger landlord who has multiple folks who have points of responsibility, making sure that you communicate with them that it's a time to be empathetic. And that will go a long way into opening a conversation on how the tenant might have the ability to pay this month, might not next, could involve waiting for stimulus checks. It could be any number of topics, but if you go at it from a from a landlord's perspective of empathy, I think it will go a long, long way. So That's really great insight, Randall. Thanks so much.
Jeff,
And now
Jeff,
I'd like to I'm sorry?
I just wanted to add one thing for to Randall's comment that we're doing on our end. This is John Hornik again. So Randall, we're recommending the same approach you're following with a slight twist. We are having each tenant and borrower fill out a application for a quote unquote deferral or modification where they're repping that they can't make the payment and that they've been negatively affected by COVID-19. Now, the purpose of that is, and we've debated it a lot, there are some tenants out there that can still pay rent, and there are those borrowers who can still make interest payments. And what we didn't want to do was call up and put it in their head that they weren't obligated to by current law, because a lot of the both lenders and landlords out there need the rent roll and the interest payment to get by. So we made it available upon request. They have to fill out an application for it. The application does take a rep and an attestation that they're not financially able to make the rep at that time before the modification or deferral is offered. Now, there are different levels of deferrals you could do. One is a complete one for the month of April or May or June or however long we're in this, and some are partial. Some people may be able to pay partial rent or interest payments. So you could get creative with this, and I think it's important to do it because, like, as sympathetic and empathetic that I am to the renters, I also am for the landlords who have employees and have debt and obligations. And if the businesses that employ everybody can't make it through this period, then there's not going to be much to look forward to after it's over.
Yeah, you make a great point, John, and we've done that same thing. If you're looking for a really easy way to do that, many of our franchisees have simply used a Google form, and again, it's upon request. I like that, John. That's a good clarification, because the big concern, on March 25th was communicating to all tenants and saying, okay, we know you might not be able to make rent, but honestly, we're at, maybe we're expecting to be at a 10% impact for April. And so you may open up a can of worms on that front. So it's been a hard balance for us to strike, looking at balancing, getting, because the tenants are being overwhelmed by media and in many cases the governor saying rent's not due, or you can't be evicted. And what does that mean? So we've taken the approach of you should get in front of it and proactively communicate what it does mean and what it doesn't mean. And so many of our franchisees have recorded videos that are being sent to their tenants clarifying that. And again, the application is available upon request for that assistance. So great clarification, John.
Yeah, I appreciate that, John. And that's really a fair point, right? Which is, at the end of the day, the landlords who have the tenants have bills and responsibilities and employees. And it's critical that they maintain their ability to be able to service these properties. If that goes away, the tenants will not be extremely pleased with the outcome of the situation. So very fair point. Now, what I'd like to do now is transition over to Danny from Home Depot Pro Renovation Services, who really can maybe provide some insight on what is happening today with all the folks who have projects at hand. On this call today, we have many different flavors of investors. Some are long-term rental, buy and holds. Other folks are buying fix and flips. Other folks are doing renovations to get tenants up and running. Danny, what are you seeing really from a boots on the ground perspective, please?
Yeah, sure. So I guess first off, just from boots on the ground, at least from a high level Home Depot perspective, and I love hearing just everything that's been shared thus far, and just how innovative everyone's having to be to try to connect with customers and lawmakers, and obviously we're involved heavily in that as well, and trying to do the best for the industry. But yeah, we're 100% focused on taking care of our customers and our associates, and that empathy just, man, it hits home, because it's a tough time for everyone right now. And as you guys probably have seen, we're eliminating a lot of our promotional activity during this time. Spring is kind of our Christmas time of the year, but we're really trying to limit as much traffic to our stores. You've seen the hours are reduced, really just trying to limit stuff for essential need type stuff. So we appreciate everyone's business and all that, but during this time, we are really focused on just safety and trying to keep everyone safe through this time. So appreciate it. And then from a boots on the ground, so our group, like I mentioned at the beginning, we started this thing about a little over 10 years ago, and since then we've built out a field team who are boots on the ground, and they work closely with our service provider or contractor network, and we've really been utilizing them a lot over the last few weeks, just trying to kind of gauge what's going on in the different areas. And it seems like just in the this last week that pretty much everything has come to a halt where we're trying to keep as many people at home as we can. But if in some areas there are still some things that are open that we're able to do, but our main focus to take care of our customers is, we're focused on securing properties. We're not just leaving things. If there's something that we had to get done, where we've been on it to get it finished, and just staying in communication with our customers. But for the most part, like I said, everything has really been halted for the time being across the country. But it's like I said, it is a fluid thing. It does change, but that's really what we're seeing here.
So Danny, from the Home Depot Pro renovation services, what is available to contractors in different parts of the country today that are still working on projects? As John mentioned, it really is a state-by-state specific either lockdown or shelter in place, whereas other places are just, still continuing on in a limited fashion. We have a lot of investors today on the call who have projects in place, and what is Home Depot doing to serve them, especially on the Home Depot Pro renovation side?
Yeah, so I would say from being on the job site, like the project managers themselves, a lot of them aren't on there because we're trying to limit the amount of people on there. But we would go in and have, whereas maybe we would have multi-trade on there, where we'd have one plumber on site doing a little bit of work. For a lot of the areas, if the permit offices are closed and something's requiring a permit, we're not able to go and pull those permits for that reason. But so if it's work that doesn't require a permit and it's not in one of those restricted areas, our contractors, the contractors that can work, they're going to work. It's really following those local mandates. But yeah, so as long as, and I would say this is pretty much nationwide. We're trying to stay as much out of the occupied properties. So most of those areas, unless it's a water heater break or something that is need, like if you've probably seen from our stores, most of the non-essential need services have been shut down. So we're not taking on new jobs to go, remodel bathrooms and that type of stuff. But if it's an HVAC or something that's necessary, that's needed, we are able to do those certain things. But again, it really defaults back to what are the laws in place and mandate restrictions that are in place in those particular areas.
So that's great feedback, Danny. Just as a follow-up, are you aware of any shortages in the pipeline as from a material standpoint that customers are experiencing across the nation? from Home Depot's inventory?
Yeah, the obvious ones are we're donating all of our masks, so that's probably number one on the list. Those are going out to the healthcare workers. So we've shut down our supply chain for that type of stuff. Probably like most people, we don't have tons of toilet paper and stuff. As soon as it gets to the store, it's being sold quickly. But from a regular product perspective, what I'd encourage is if it's something that you need, if you can do a purchase online and have it delivered to either a warehouse or your house, I would recommend doing that just to try to limit some of the traffic, and then that helps us kind of aggregate some of the product from outside the store area and service our customers, especially if it's something that maybe you don't need today, but you're going to need next week or the following week. Getting ahead of it, because we all know when this thing does lift up, the work's going to start, and then there probably will be a shortage of certain materials. And so if you do have cash and need to buy certain things to keep things moving, I don't think that would be a bad thing to look into. And while we're talking about cash, one of the things that we've been doing with our contractors, because everything that we've heard is, just they're strapped for cash. So they're not our tenants. They're our customers. They're like our tenants for the people on the property management space. And we've got to take care of them, make sure that they are able to continue working. So we've been trying to eliminate any of those hurdles that they may have. And if it's something we can help them out with, that's what we're doing to try to help out.
Well, we're coming up on the top of the hour right now, and I just want to wrap things up with a few thoughts. And one would certainly be from, and I know I speak from all our panelists, is let's put safety first. We will get on the other side of this, hopefully in the not too distant future. But most importantly, you want to take care of your family, you want to take care of your employees, and you want to take care of your tenants. And if you take care of those sort of items in that order, we will all get on the other side of this and be much better off. We're all anticipating a very robust turnaround. As I've stated on many calls that I've been on the past couple of weeks, is there was not enough houses before this crisis started, and there will not be enough houses after the crisis ends. And with that said, once again, a big thank you to Randall, John, David, and Danny, and a super big shout out to Robert and Suzanne from REI Inc. for putting this together. Just one housekeeping note. Next Monday, there will be a property management specific panel that will convene at 2 o'clock. More details to follow that from REI Inc. Once again, thank you and stay safe.